Hello everyone, we welcome you to this meeting presenting research results for the half year 2023-2024. Today the speakers are Pascal Imbert, co-founder and CEO of Wavestone. Hello Pascal.
Hello Justine, hello to all.
And Laurent Stoupy, CFO of Wavestone. Hello Laurent.
Hello everybody, hello Justine.
Laurent, the floor is yours.
Thank you Justine. As announced on October 30th, over the whole of H1 2023-2024, Wavestone generated a total revenue of 276.7 million euro, a solid growth of 17%. At constant scope, so excluding Pen Partnership and Coris Consulting, and at constant Forex, organic growth was 12%. This solid organic growth was achieved despite an unfavorable working day effect of -2.2%. Growth benefited from the increase in the workforce at the end of the 22-23 fiscal year and from the intensification of business development activity in recent quarters. Now, let's look at our KPIs. Over the whole of H1 23-24, the utilization rate stood at 73%. After falling to 71% in Q4 last year, it has progressively recovered. The average daily rate was 900 euro over H1. This is up 1.1% compared to 890 euro for the whole previous fiscal year. The order book was 3.6 months at the end of September, down compared with 4 months at the end of March. This is a result of the slowdown in order intake, typically seen in the summer, as well as a deterioration in the business environment. With respect to human resources, the staff turnover rate has continued to slow down. It is now stabilizing on a rolling 12-month basis at 14% at the end of September, compared to 16% at the end of March. Given this reduced staff turnover and the degraded economic environment, we are maintaining a moderate pace of recruitment over the fiscal year. Finally, at the end of September, Wavestone had 4,305 employees, compared with 4,406 at the end of March. We are targeting an increase in the workforce over the entire 23-24 fiscal year. In terms of profitability, the firm's EBIT was 36.8 million euro, a solid increase of 24% over the same period last year. The EBIT margin was 13.3% compared to 12.5% last year, despite the unfavorable working day effect. This growth in a degraded business environment is a result of a good sales price to salary ratio and of our control of costs. Purchases consumed have increased more rapidly than revenue. This is due to the consolidation of Pen Partnership and Coris Consulting, which make greater use of subcontracting than the rest of the firm. After considering the amortization of client relations and other operational income and expenses, operating income was 33.2 million euro, a robust growth of 29%. Finally, after taking into account the cost of net financial debt, the other income and expenses, and the tax charge, net income stood at 23 million euro at the end of H1 23-24, an increase of 28% compared with H1 22-23. Net margin was 8.3% compared with 7.6% a year earlier. On the balance sheet, shareholders' equity increased by 12.8 million euro, reaching 311.9 million euro at the end of September. Net cash was 13.3 million euro at mid-year, compare with 27.1 million euro at March 31st, 2023. Pascal, I give you the floor.
Thank you, Laurent. Let's maybe comment now the outlook for the rest of the year. And the outlook for the rest of the year is first and foremost the combination project between Wavestone and Q-Barrier announced last July. This project is transforming and strategic. Wavestone is today a consulting champion on the French market. Tomorrow, the combination with Q-Barrier, if it is completed, will create a new Wavestone, which will take its place among the major international consulting firms. Our change in size, our new international reach, and our extended value proposition will give us access to new opportunities among our clients to serve their most global transformations. This change will give access to new areas for growth, both with our existing clients, but also with new major international accounts we can now target. From day one, if the project is approved, the new Wavestone will have revenue of nearly 850 million euros and over 5,500 employees. We will operate in 17 countries with leading positions in 3 of continental Europe's main markets, Germany, France, and Switzerland, not forgetting our strong positions in the UK, in North America, and in Asia. Last but not least, we will benefit from a rich portfolio of very large clients, diversified both in terms of sector and geography. Moreover, this new Wavestone will have the foundations for an ambitious growth path. We would target, by the end of March 2025, a revenue of about 1 billion euros, with an EBIT of at least 130 million euros. In the longer term, the new firm would target an average growth rate of 15%, combining organic growth and acquisitions, while gradually increasing our profitability to 15% of EBIT margin. Alongside this financial performance, we would also set challenging objectives in terms of human resources and corporate responsibility, as we aim to be among the top 5% of companies in terms of extra financial performance every year. From a more technical standpoint, the combination would result in Wavestone acquiring 100% of Q-Barrier's capital on the basis of an enterprise value of 330 million euros, excluding earnout, representing a base price for Q-Barrier shares of 322 million euros. An earnout of up to 35 million euros would be paid in addition to this base price, this earnout being conditional on Q-Barrier's performance at end March 2024, a performance that will be measured by the level of EBIT at end of March 2024. This operation will be financed for 79% of the base price by the issuance of new Wavestone shares, based on a reference price for the Wavestone share of 54 euros. The remaining part of the base price and the earnout would be paid in cash on Wavestone's available funds. The new entity would be controlled by an action in concert comprising Michel Dancoine, co-founder of Wavestone, myself, the other co-founder of Wavestone, and the majority shareholders of Q-Barrier, represented by Carsten Hoppner, the current CEO of Q-Barrier. These 3 parties, who would represent 60% of Wavestone's capital, have signed a 10-year shareholders agreement testifying our long-term commitment to this project. And we would also be subject to a 4-year lockup. As part of this project, Wavestone's board of directors will be extended with the appointment of 2 new members from Q-Barrier, Carsten Hoppner and Astrid Gleichschmidt, another partner of Q-Barrier, to reflect the new shareholder structure and to make the board more international. As for Wavestone General Management, currently made up of Patrick Irigoyen and myself, it will be extended to 3 people, Carsten Hoppner, current CEO of Cuperior, becoming an other Wavestone's Chief Operating Officer. We are now in the very final stage of this project, since this operation will be submitted to the vote of our shareholders at the extraordinary general meeting tomorrow. Let's comment now the outlook on the scope of Wavestone's current activities. As we have seen in this presentation, thanks to Laurent, the first months of the 23-24 fiscal year have seen real momentum, enabling us to achieve solid growth and profitability, which are the direct result of the intensification of our business development activity over the last quarters. Utilization rate is progressively recovering after the drop we experienced in Q4 22-23. Sales prices remain solid. Sales price to salary ratio is even on a good trend, and costs have remained under control. But despite this good news, we should not forget that the business environment is difficult and uncertain, demand is slow overall, and the approach of clients is more wait and see when committing expenditure to consulting projects. Some sectors, such as banking, retail, and the public sector, are particularly affected. Fortunately, there are some other sectors which show more resilience, such as insurance, energy, luxury goods, and transport. Moreover, as often is the case in this type of period, projects that are predominantly technological are holding up well, whether in cybersecurity, IT infrastructures, data, or AI, of course, with the burst of demand coming from generative AI. To sum up, a challenging market environment, which leads us to be cautious for the second half of the year, but opportunities remain, they are actual. It's up to us to transform them by maintaining an intense sales effort and by being agile. Despite the business environment I just described, we confirm our guidances, and so our objective of achieving revenue of over 580 million euros, representing a growth of 9%, equivalent to 7% at constant scope. This objective takes into account the weaker growth dynamics in H2 of 23-24, resulting from the market environment and resulting also from our cautious stance in the pace of recruitment in several quarters. We are also confirming our objective of an annual EBIT margin of about 15%. These objectives take into account the effect of full year consolidation of Penn Partnership and Covis Consulting. They are at constant forex basis and exclude Cuperior or any new acquisition. So that covers the commentary on our figures for the half year and our outlook, and we'll be happy now to answer any question you might have, any questions you might have.
So you can now ask your questions, and to do so, please unmute your mic. Well, if there is no questions, maybe Pascal, I'll let you conclude.
No, I think you should insist, Justine.
You can unmute your mic if you have any question.
And if we don't have any question, maybe you could ask a question on your side.
I can, but everything was clear for me. So.
All right. So then, if it's the case for all the attendees, thank you very much again for attending this presentation. And you can see that our next publication for Q3 revenue will take place on January 30th, 2024. Thank you very much again, and have a very good end of day.
Thank you.
Thank you.
Bye.